Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be with you to break down an action-packed day in the markets. We've got a lot to cover, from record-breaking moves in tech to geopolitical twists and some key earnings on the horizon. So let's dive right in and see what's driving the action for us long-term investors, while also keeping an eye on those short-term trends. First up, let's talk about the major indexes because they're setting the tone today. It's a green day across the board with the Nasdaq leading the charge, hitting a fresh record high with a solid gain of over 1.6%. The S&P 500 isn't far behind, climbing more than 1%, while the Dow Jones also posted a nice uptick of nearly 0.7%. What's fueling this rally? A big sigh of relief after President Trump extended the ceasefire with Iran, easing some of those geopolitical jitters that had markets on edge. But don't get too cozy. Tensions in the Middle East, especially around the Strait of Hormuz, are still a wild card. For us long-term folks, this kind of volatility reminds us to stay diversified and not get swayed by daily noise. Zooming in on the Nasdaq, tech stocks are the stars of the show. We're seeing a resurgence in the AI trade, with BlackRock pointing out that the sector's momentum is back in full force. This ties into a broader narrative of innovation driving markets, which is something to watch if you're building wealth over decades. Short term, though, keep an eye on whether this hype can sustain itself or if we're due for a pullback. Now let's check out some of the big winners among large caps. Intel stole the spotlight with a nearly 5% jump, riding the wave of semiconductor strength. Advanced Micro Devices also had a strong day, up over 3%, as chatter grows about its potential to challenge NVIDIA in the AI space. And check out Lumentum Holdings, soaring more than 8%, a standout in the tech hardware space. These gains signal robust demand in tech, which could be a long-term tailwind if you're positioned in growth sectors. On the flip side, not everyone's celebrating. Tesla took a hit, dropping over 5%, as investors brace for its earnings report later today. Concerns about delivery numbers and full self-driving tech are weighing on sentiment. More on that in a bit. GE Aerospace also slipped nearly 4%, and ASML wasn't immune either, down over 3%. These dips remind us that even in a bull market, individual names can face pressure. For long-term investors, these could be moments to reassess entry points, especially in innovative names like Tesla. Speaking of market movers, NVIDIA continues to dominate trading activity with a modest gain, reinforcing its role as the AI heavyweight. Palantir also caught attention with a nice uptick, boosted by news of a massive Department of Defense funding request for its Maven system. These names are shaping the market narrative, and for us long-term players, they highlight the importance of staying in tune with megatrends like AI and defense tech. Looking at the most active stocks by volume, NVIDIA and Tesla are unsurprisingly at the top, reflecting intense investor interest. Intel also saw heavy trading after its strong performance, while names like Nokia popped up with a surprising 6.6% gain. High volume often signals where the action is, but remember, for a long-term strategy, it's about the fundamentals, not just the buzz. Shifting gears, let's touch on some broader economic news that's impacting sentiment. Kevin Warsh, Trump's nominee for Fed chair, has been making waves with his Senate testimony. He's pushing for a regime change at the Fed, aiming to shrink the balance sheet and limit communication with markets. This could mean more uncertainty for us investors in the short to medium term, as forward guidance might take a back seat. Long term, though, a more disciplined Fed could stabilize inflation expectations, just something to watch as this nomination process unfolds. Now, let's talk earnings, because it's a busy week. Tesla's report is the big one today, with investors eager for updates on production and autonomous driving tech. Analyst sentiment is mixed, especially after some vocal criticism about its self-driving promises. Later this week, we've got heavyweights like Intel, Alphabet, and Comcast reporting. There's also AT&T, which already beat expectations today with strong revenue and margin growth, though its stock is oddly in the red. And keep an eye on United Airlines, which posted a solid quarter with record revenue. These reports give us a pulse on consumer and tech trends critical for long-term portfolio decisions. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your investments. Peaking at the top performers over the past week, Garmin led with a massive 21% surge, while Lumentum and AppLovin both clocked in with gains over 14%. These moves underscore strength in tech and consumer discretionary, hinting at pockets of opportunity for long-term growth if you're selective. On the other end, Genuine Parts took a brutal 20% hit over the week, and Rivian dropped 14%, reflecting challenges in auto and EV spaces. These declines might spook short-term traders, but for us long-term investors, they could signal potential value plays if fundamentals hold up. Wrapping up with sectors, industrials topped the charts with a 2.1% gain over the past week, followed by consumer cyclical at 1.6%. Energy also showed strength, up over 4%, likely tied to oil price volatility amid Middle East tensions. These sector moves can guide us on where to overweight for long-term exposure, especially in resilient areas like energy. On the weaker side, healthcare lagged with a 0.6% drop, and financial services saw a slight dip. These underperformers might face near-term headwinds, but they're worth monitoring for contrarian opportunities over the long haul. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates, in-depth SWOT analyses, and exclusive insights to help you build wealth over the long term. Hit that like button, subscribe, and we'll see you tomorrow for more market action. Stay invested, stay informed.